So maybe you've heard the term technical analysis. It gets thrown around a lot, it gets talked about a lot, and you might hear support, resistance, breakout, breakdown, all of these key levels that we talk about. And maybe your head's spinning and you're not sure what all these terms mean. Today, I'm going to break down technical analysis for beginners. Hey everyone, lead trainer with StocksToTrade, Tim Bohen here. Be sure to like, subscribe, and if you're on YouTube, ring that bell to be notified as soon as we go live. Would love to see you on the daily pre-market prep where I'm live every day, and ringing that bell is the best way to be notified. And then, ultimately, I love doing these videos, love bringing all this information. Today we're talking technical analysis, but if you really want to get into the hardcore of it, check out the StocksToTrade team. I actually have an entire mini course inside the StocksToTrade team that I call Chartology. Just kind of a name that I made up. It's a 5-part video series, 45-minute, 5 webinars, breaking into the extreme nitty-gritty of technical analysis, support, resistance, key levels, etc. So check out that StocksToTrade team, get access to that course. That being said, today let's get into the basics of support and resistance particularly. Okay, so why do support matter? Why does resistance matter? Why do traders fixate on these terms and these levels? Well, ultimately, what we're looking for is breakout areas and then on the short side, breakdown areas. And when we talk about resistance, we're talking about those levels that get selling pressure every time a stock spikes up. And today I'm going to talk about Plug, which is an amazing stock today, big gap up on some amazing news, and this has been an EV play all year. But I'm going to drop some lines on and show you what we're particularly looking at when I say support and resistance. So you can see stock was kind of steadily uptrending through the spring, and then we came out of, to a certain extent, this is back that 2020 chart. EV plays perked up in the beginning of the year. You can see Plug went from 4 to 6. When I say EV, I mean electric vehicles. Plug's a little more battery related, but it's still in that EV sector. Had a big run back in February, but then coronavirus came, kind of shut down the EV plays. Then we got that big perk up in summer 2020, which kicked off one of the hottest sectors I can remember in my 15 years of day trading. And to this day, I'm recording mid-January, and we're here 6, 7, 8, 9 months into this electric vehicle run, and we're still breaking out. But you can see, I didn't draw a line, but I'm hovering my cursor over that $6 level. And you can see every time the stock would start to trend up in early June, it would fail at that level. Because the idea is, the concept is, everyone that bought the breakout back in February, look at that big volume. You can see the huge volume there. And actually, I am going to take advantage of my fancy tablet to get into a little bit more detail on this. So you can see you've got that big volume. A lot of people bought that breakout, and then coronavirus came. Market crashed hard. So you've got that big group of what we call bag holders, people that bought the breakout and no fault of their own. I mean, I know bag holders get picked on a lot, and sometimes, there's just bad news in the stock, but I mean, you can't predict a global pandemic. I mean, that just happens. They got stuck. They didn't want to take their loss, so now they get trapped. And then you can see what happens when that 6 level breaks again. You get that big spike, because what has now happened is all those buyers from back in the spring, they're now green. If they held for 4 or 5 months, which you shouldn't do, you should stick to your plan, take your stop. Don't wait 4 months and hope that the stock spikes again. But the fact is, once 6 broke, you knew that there was a high likelihood that all these bag holders are going to start adding. They're finally green. They're like, woohoo, I'm green on this trade 4 or 5 months later. What happens? Volume spike. What happens? Price spike. We get that move all the way up to 10 because that resistance level broke. Now what happens? Resistance tends to become support. So let me back off a little bit on some of these lines. You can now see that that level, after the stock spiked to 10, pulls back, and then can't break. Once it breaks 10, you get that big spike again. And then establish a new resistance level. And when that level breaks, there at 14, look at that, 3, 4, multiple green days in a row. Stock keeps gapping up, keeps running. Then the biggest key I want to make is back to this wedge area that you can see that I drew. There was a big pullback. So that green line at 14 denotes the new resistance level after this spike here. Now stock tries to break, can't. Tries to break, can't. Tries to break, can't. Then breaks through, moves big, pulls back hard. But this is where you're looking for that dip buy opportunity, because now, as we say, that resistance once broken becomes support. So the stock isn't typically going to break back down through those levels, and you'll see that bounce off of those levels. And the stronger the resistance, the stronger the support. So when you've got that triple top, and that was August, September, half of October, you've got 2.5 months of resistance that is built up, that's coiled. So when that stock pulls back, you have a high likelihood that you can buy into that support level and you're going to get the bounce. Now, you got to stick to your stop. You got to have a plan. Support doesn't always hold. Support can break down. That's where the short sellers pile in and pound the stock lower. But as you can see, once that bounce happens, look at that move. And you've got 1, 2, 3, 4, 5, 6 green days in a row, 1 small red day, 2 more green days, 1 small red day, and another green day. So that's 1, 2, 3, 4, 5, 6, 7, 8, 9 green days out of 11 trading days. It's a heck of a move, and it's preceded by that bounce off of support. And then it repeats again. So now you've got that big move. Then that 26 level becomes support. You can see the stock spiked all the way through, pulls back hard, breaks, and then creates that W-shaped breakout area. And then the beauty is, let's say, hypothetically, you bought that breakout move at 29-ish. You're risking that 26 level, so you're risking a couple bucks a share. But at the end of the day, you've got almost $9 of upside. So that's your 3-to-1 risk to reward, which is something I teach in the Steady Trade team all the time. You know, your risk, you can never be risking more than your potential reward. And when you look at the range, when you look at the potential for a stock like Plug, you know that if you risk that failed level, so that breakdown area is your stop, you've got blue sky. This is all-time highs for Plug, 52-week highs, multi-month, multi-week, breakout on every time frame. And it's a hot sector. At the same time, Tesla's been going wild, so Tesla's leading the EV sector. You're in a hot sector. You've got a stock with news. There's a high likelihood that it continue to break. And if it does fail, you've got to level the risk off of. You got to have intelligent levels to base your risk off of, because what's the best way to become that bag holder that we all make fun of? Not having to stop, and even worse, not being able to even determine a stop. So use the chart. So let's go back to, this October move. Let's say you bought that 14 move, and then you see that level down here, that's that breakdown down below 12. You now can look at that, clearly define your risk to reward, and you now know if 12 breaks, the idea is broken, you need to move on. That's trading. And ultimately, a lot of people overlook this. You can't expect to have a 100% win rate. What you have to understand, you're going to lose. I bring up the Michael Jordan quote all the time. He missed thousands of shots in his career. I'll botch the quote, but I think he got trusted to win the game on the last shot, and he missed it 22 times, okay? Arguably one of the greatest basketball players ever, and he's failed. But if you minimize your loss, you're smart, you use the chart to guide you. That's the big thing is, listen, you can, these Robin Hooders these days, I don't even think they look at charts. They just buy any stock that's moving, and they don't know when to stop out because they don't know how to read a chart. They don't know how to look at resistance levels. They don't know that history tends to repeat. Support and resistance levels come into play. High a day breaks come into play. Whole dollar, half dollars come into play. VWAP comes into play. Pre-market highs, after market highs. There's about 15 different key levels we talk about every day in the Steady Trade team, but you need to have a firm understanding of where people are going to sell, where people are going to buy, and what's going to happen when these levels break to the upside or to the downside. I mean, if you're considering being a short seller, listen, when you see support break, so let's say it didn't hold on plug and plug broke down right here, and let's say it's not a hot sector play, things are going to get ugly, which means that's good for a short seller. So basically take everything I said and reverse it when you're talking resistance and support. And those are the areas that you're looking to short into. So you're shorting into those triple tops and you're covering in to that washout when the stock breaks down under those whole dollar, half dollars, and support levels. So, all right, lot to go over in technical analysis. I mean, I've read tons of books. There's a bunch of amazing books out there. We actually use several of these books as quote unquote textbooks in the Steady Trade team. Mentioning that Chartology course I talk about, we actually use one of the best technical analysis books ever. It's about 10 years old. I love it. I reference it all the time, but I've got that 5-part video series that's a companion to that book. It's a great way to visually understand and talk about the psychology of technical analysis. Check out the Steady Trade team. We talk about all these levels every single day, and I think the best way when it comes to chart patterns, you need to be a technical trader. I mean, it's just the only way to succeed in day trading. You have to use the chart for 95% of your decision, and the best way to do that is pattern recognition. Best way to get pattern recognition is to look at charts till your eyes bleed. That's what we do in the Steady Trade team. Twice daily webinars every single day. Check it out, and I'll see you on the next video.